Hi, good morning, everyone. Let's give it a few seconds. Hi, good morning again, everyone, and welcome to Saxo's weekly market outlook call. We call it the Saxo Spotlight. I hope you can see the slides. I'm Charu Chanana. I'm a market strategist with Saxo Singapore, and today with me is my colleague from Sydney, Jessica Amir. So I think we will just kind of quickly touch upon what happened in the markets last week, what was critical, and more importantly, what to watch this week and where markets could go from here. So I think just getting back to last week a little bit, I think it was really critical week because we did see a little bit of a rhetoric shift coming from central banks. We talked about it last week as well, where we thought central banks were starting to get more hawkish in their commentaries. That really went several steps further, I would say, this last week, with the first catalyst really being the US CPI report, where I would say it wasn't as evident that deflationary trends are entrenched. So, in fact, what we really saw was goods disinflation being reversed a little bit, and services inflation is still remaining sticky. Same for PPI as well, which was hotter than expected. And to top it all, we did have some hawkish Fed speakers, especially I would highlight Bullard, who kind of opened the doors for the possibility of a 50 basis points rate hike again in March, although he's not a voter. And I personally feel it will be very difficult for the Fed to move back from a 25 basis points to a 50 basis points. I think that will send some credibility issue signals as well as inflation concerns like really ravaging through the markets. But okay, that's a discussion which we can postpone by a month for now because the next Fed meeting is not due for another month. But the market pricing for the Fed's funds futures is actually, pushing higher. The terminal rate is now being priced in at 5.29%. It's somewhat above what was reflected in the dot plot in December, which was 5 to 5.25%. So, and we are close to 10 basis points above where we were last week, this time when we did this call. So I think yields really are a big focus this week. The 2-year went above 4.7%. And remember that the November high was about 4.8%. The 10-year yields also getting very close to that 4% mark. That will be, I think, a big watch this week. 4% plus kind of levels in 10-year yields is really potentially, a danger zone for equities, I would say. If we do cross that, I think we would be in some fears for the markets to turn lower. The last time the US 10-year yields were about 4%, S&P 500 was below 3,900. Right now we're about 4,100. NASDAQ 100 was below 11,500. Now we're at 12,500. So it could really send some, fear signals to the markets. I think that is really the key thing to watch this week, and what could make it move. Of course, again, data of Fed speakers, especially given we have PCE, the Fed's preferred inflation metric, coming due this Friday. So if that again continues to send that same message that inflation is here to stay, and it could again continue to push those market expectations of the Fed higher, which could mean further declines in the markets as well. FOMC minutes are due as well, but I would say those are less relevant because the inflation picture has changed quite a bit since we had that last meeting. So I wouldn't give too much weight to that. Maybe I'll just pause here, and Jessica, maybe you want to look at what's happening in the equity space in more detail.
Thanks, Charu. Yeah, really important to note. Hoping you can see the slides here. Just important to note that we've been speaking about the S&P 500 being in an uptrend. So the uptrend is intact, but it doesn't mean we're going to stay this way. As we said, we're possibly likely to see more Fed speakers play into that stronger than expected data set. So 3 hot data sets now. And we could potentially see some, as Charu said, some more hawkish commentary, and that essentially might pave out the path that we've been reiterating at Saxo: high for longer inflation, high for longer rates. So the market is looking a little bit vulnerable for potential pullback, and we can see this with the um, with the moving average convergence divergence, suggesting that buying momentum is slowing down. So what we're seeing at Saxo is clients are increasingly using options and also futures to protect their portfolios. And thirdly, they're also booking profits. And that is particularly noticeable in the trader cohort of our client book, whereas we are seeing some clients in the investor part look at buying those companies that they want to potentially hold for the next 3, 4, 5 years. So that's something to note as well. We are also seeing Tesla's uptrend and Microsoft's uptrends looking a little bit fatigued, and these are probably going to be key to watch if they do reverse. Also, keep in mind, we've been speaking about Tesla. Tesla is one of the most bought stocks at Saxo, and we saw a huge increase in options last week. For those that are interested in knowing, the increase in options was in the event that Tesla does turn over, and Tesla is in overbought territory. So that's something to keep on your radar as well. Again, looking for those companies to potentially reverse course, and that also could signify a pullback and lead to the broad indices pulling back as well. But Charu, I'll hand back to you for FX.
Yeah, thanks, Jess. So yeah, in the FX space, really the big story is whether the strength in the US dollar can return. And we've continued to argue that the US dollar is not just yield sensitive, but also risk sensitive, so very hard to turn lower. And I think it has been the outperformer last week, potentially driven again by the yield surge that we talked about. And I think that focus on yields will also again keep the focus on the US dollar pretty strong this week. Last week, the underperformer was as a result of again the yield story, the Japanese yen, but also we are seeing those expectations about any policy shifts from the incoming governor of Bank of Japan, Ueda, now kind of somewhat moderating after we had a big hawkish tilt in the markets because, of course, Kuroda is leaving and Amamiya was not selected. These were the two most dovish choices. So Ueda is certainly a bit less dovish than that. But whether he can really bring about policy shifts immediately is still a big question. So I think interesting to watch this week. He is going to be, going in for parliamentary hearings in the lower house on Friday. And I think it'll become increasingly clear as to what his policy stance is. He's going to be questioned on that quite a bit. So I think expecting a lot more volatility in the yen because of that. We also have Japan's January CPI data due this week, and again, potentially staying above expectations, expected to go higher from where it was last month. So 4% plus kind of levels. And the headline is obviously that's again sends those expectations of potentially some normalization of policy soaring. But I think the focus will still be more so on what Ueda's policy stance looks like. Elsewhere, we will have a meeting from the RBNZ, the Central Bank of New Zealand, up on Wednesday. So expectations are for a 50 basis points hike, slower than the 75 basis points we saw last in November. But of course, there are some concerns. There are some people who are also actually calling out for a 25 basis points rate hike because there's been a cyclone and there's been obviously growth and inflation concerns coming from that as well. But, inflation expectations from New Zealand slowed last week. And I think that's one reason why New Zealand dollar was one of the underperformers. And if, that data set or inflation slowdown is given more of an emphasis, potentially signaling a pause, we could see further New Zealand dollar weakness as well. And if we don't see a strong enough pickup in commodity prices, I think there is potentially some reversal too for Aussie dollar and Canadian dollar also. But of course, to I think dig more into what's up for commodities, I think we're approaching some very critical levels there, and I'll pass on back to Jess to cover that.
Thanks, Drew. Hopefully everyone can see our commodity slide. So spot on. So I guess the key to watch is as Charu said, the key to watch for commodities is of course the US dollar and also bond yields. So with bond yields front and center, we've seen gold approaching a really key support level now, and we are really watching gold. And the reason for this is because we've seen gold essentially move down lower because we've seen bond yields are moving up to cycle highs, as has the US dollar. But in saying that, though, if we do get more dovish commentary potentially, I should say, if we do get dovish commentary, period, then that could mean that gold potentially makes a run up higher. Again, the key support to watch is mentioned in our outlook. Copper, the key support level that we're watching is that $4 area. So that's providing support for the market. And again, catalyst for copper and gold are bond yields in the US dollar. The other metal that we're watching this week is iron ore being the key steelmaking ingredient. So we're likely to see some supply issues creep into the market that could potentially mean higher iron ore prices this week. And what is coming into question is supply being taken out of the market in Brazil. We know later this month, Brazil is going into their peak rainy period. So that is something to keep in mind. Could we see Vale, the world's largest producer in Brazil, or one of the world's largest iron ore producers, we should say, and the largest producer in that region, they could potentially downgrade output. That being said, BHP is the world's biggest iron ore producer, and they report results tomorrow. The next day, we hear from Rio Tinto. So, a focus will be on the outlook for copper and also iron ore as well. And lastly, given our bullish view on copper and also our bullish or significantly bullish view on aluminium, that brings us to focusing on Rio Tinto as well. So BHP does have obviously their biggest revenue maker is iron ore. Their second biggest revenue component is copper, and then Rio Tinto, their biggest cohort of their revenue is iron ore, and also followed by aluminium, and thirdly copper. So these are going to be really key to watch as for what we can expect for the outlook for aluminium and copper as well. And of course, just rounding out Saxo's preferred commodities, aside from aluminium and copper, our other preferred metal is lithium. And so we'll hear from Allkem and Pilbara Minerals, who are the largest exporters of lithium in Australia. Last week, we heard from Albemarle, the world's biggest lithium producer, and they reported a better than expected outlook for the year ahead on the back of demand picking up from China. So it'll be really interesting to see these results play out, and we're expecting better than expected outcomes from this cohort of the market. Charu, back to you with other news to watch this week.
I think I just have two more things to highlight, really. I think this week will be really key for geopolitics, I would say, because we are approaching this, unfortunately, this 1 year anniversary of Russia's invasion of Ukraine. And also, US China tensions are heating up since that balloon incident. So, last night, there was also some reports that China may be potentially supplying arms to Russia. So, I think that could obviously, again, bring a further drift in US China relations as well. A lot of key political meetings this week on the cards. So, I think that does mean that defense stocks could remain in focus. Last week, defense has been one of the best performing baskets in Saxo's theme basket universe. So I think obviously just something to keep on your radars. The defense stocks could potentially be interesting this week as well. And two, we have just launched a new equity theme basket on luxury items. So that's very interesting. It's mostly European stocks, European luxuries. It's potentially again another another proxy for that China reopening theme that's been going on. Plus, we also know, most of the European indices are actually now outperforming the US indices this year, and a lot of that has been driven because of these gains in the luxury stocks as well. So I think, again, do take a look at this on the Saxo platform. It has a list of stocks for inspiration if you want exposure to that China reopening theme, but are also potentially still looking not to invest directly in China. I think that's a really interesting proxy that we have there. Jessica, is there anything else that you want to add?
Yeah, so as we've been speaking about as well, for those that don't know, some of the best returns this year in Europe in the stocks 50 have come from some of those large heavyweights in the luxury brand. So we've been speaking about Louis Vuitton, Moet Hennessy and Hermes are reporting stronger than expected numbers and outlooks, but also investors are preempting a continuation of earnings growth and cash flow growth, and that's why their shares are some of the best performers this year. So that's why we've reported or put together this basket that is really key to have a look at. So great that we mentioned that as well.
Right, just I think summing it up, I think yields really critical to watch this week. Bank of Japan's Ueda, this is parliamentary hearings, I think would be interesting because we are still in that uncharted territory. We don't know what his policy stance looks like. Obviously, in terms of the equity baskets, defense, luxury, these are some things that will remain in focus this week. And then earnings, this thing is obviously Jessica highlighted the major miners, BHP and Rio, and the lithium players, but also China technology names, Baidu, Alibaba. I think very interesting to watch this week because obviously the market's so focused on Chat GPT and the potential for AI, and Baidu is also reportedly working on a Chat GPT like product. So, the potential for AI and the outlook on that it will be, I think, a key point for the markets. We also have some important Singapore the companies reporting, if you're based here, Singapore Airlines potentially, and banks like OCBC and UOB after a stellar reporting we got from DBS a week or so back. I think these banks will also remain pretty interesting. And do we wrap up there, Jessica? Is there anything else?
That's it. Just stay safe out there, and just a key to watch the USD and bond yields, and of course, stay tuned to our daily research, which you can find at analysis.saxo. And for any information or further information, questions, feedback, or comments, reach out to your relationship manager or perhaps your global sales trader, or you can reach out to us alternatively at our respective Twitter handles. And that's pretty much it.
Thank you. Thank you for attending. Bye.
Have a great week.